Greetings, this is Dr. Jeffrey Scott, and this is my Market MRI Pro update for Tuesday, July 29th, 2025. Well, yesterday I wondered if the lack of response to the trade deals suggested we were in the topping process. And today I asked the question, did today's intraday reversal, at least on the NASDAQ, NYSE, and the spiders at all-time highs, signal a top? And I think it's a legitimate question. We've got two more trading days in July, and then we go to August, which is not always a good time of the market. Now, we'll talk about why that may not be true about the high, all-time high signaling a top, but it's something you got to keep in the back of your mind. Again, my name is Jeffrey Scott. Excuse me. My email address is marketmripro@gmail.com, and the name of my Google group is called Top Down Trader. These are unscripted, unplanned. I just say what I think. I follow the same basic format, um, and I don't go back and edit them. So I have to be careful not to use any F-bombs or anything else like that during my presentation. So let's go ahead and see what we got here. This is for educational purposes only. Any recommendation should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk, and you are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And I have tools for multiple platforms, but am an independent trader. I always like to mention my top-down trader Google group. This is how I reach out to folks. I don't abuse it. You get discounts on my tools if you join. Love to have you join. Other than that, it's how I send out videos when I don't feel like placing them on YouTube. I place them every day in this group, and there's sometimes some active chatter at market turns. Palm Beach Gardens meeting, still looking for attendees, October 27th, 28th. I think I'm going to commit to the Marriott Hotel, the full service Marriott in Palm Beach Gardens. It is off of PGA East and then south of PGA of I-95. I'll get all the specifics to everybody as we get closer. It has been refurbished within the last couple of years. It's a nice hotel. $12.50 will include breakfast, lunch, and dinner on Sunday, breakfast and lunch on Monday. Who knows if many of you are sticking around, we'll go out for dinner on Monday night too. And there'll be snacks and drinks and coffee throughout the meeting. 2 days of education, software instruction. I will be offering for those that don't already own the program a discount similar to what I did at the Palm Beach, excuse me, the Orange County meeting. Not the full cost of your admission, but a significant part of your admission as a discount. And if you're coming to the John Person seminar, stick around for mine. If you're coming for mine, go to John's as well. You'll find a lot of synergism. I really like how he trades, and I have been following him for about 15 years. For more information on both seminars, reserve your spots, contact me, Jeffrey Scott at marketmripro@gmail.com, and I will put a link to register for the meeting. And your receipt of your Stripe is your confirmation, and I'll be reaching out to everybody that's paid in the next couple of days. I'm only going to keep 12 in the room, figure 13 and 14 for Praveen and I just filled up my boat. Once we get the first 15 people or so, or excuse me, 12 people or so, everybody will go to online. As we get closer to the meeting, I'll see if any spots open up in the room. Everything will be recorded. You'll get the PowerPoints, and I've already got a bunch of people booked for online as well. Know your news and earnings dates. Wednesday, ADP, Employment, GDP, and then drum roll, please. The FOMC meeting. Now, I don't expect a cut. My fear is if he doesn't cut and he doesn't talk like a cut is likely in September, the market may be disappointed. At one point, we had priced in 3 cuts, and now maybe there's 2 cuts, and maybe there's no cuts. I really think how he presents the story, rather whether he cuts or not, is going to be the big issue. What's even a bigger issue, I'll talk a little bit about earnings on Tuesday, at least early, excuse me, Visa was down quite a bit. Starbucks was up. Sci-Fi, which reported early today and was up big before the market rolled over, did what a lot of companies do after they pop, and they did a secondary, so they came back down to ground. Booking was actually negative. Some Teradyne, I believe, was positive. Before the market opens, VERT, one of the ones we talk about, are VRT rather, the cooling systems for data centers. That'd be interesting to watch. On the afternoon, we got Meta and Microsoft Robinhood. Those might be interesting to some of you. Carvana, and then look what we got Thursday, Amazon, Apple, and many more. So it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Again, for more information, if you have Market MRI Pro and you have any technical problems, apologize for that. Reach out to Praveen at coding@marketmripro.com. And if you have interest in purchasing it, interested in the meeting, any questions about my funny vocabulary, excuse me, what I talk about, reach out to me at marketmripro@gmail.com. And why not join Top Down Trader Group before you go to bed tonight? Go ahead and hit the subscribe button. You'll get notice when I put these out. They'll show up in your feed. Hit the alarm. It'll give you a good notification so you can look on a timely basis. Let's go take a look at the charts. Yeah, I've got a lot of icons, don't I? All right, I'm going to start with the buckets, not the buckets, right? The daily briefing. And this was a painful day for me. Thank God, chart industries, or thank God, that's a overreaching statement. Thankfully, Chart Systems, GTLS, one of my holdings, got bought this morning. So it made up for a lot of the negativity, but that was just luck. Let's take a look at the major indices and let's rank them on one-day performance. A lot of negatives there. So volatility was up 2.41%, closing at the near the high of the session. The dollar was up a quarter, closing closer to the bottom. And then the Qs, the spiders, the diamonds, and the Russell were down, ranging between 0.15 negative on the Qs and 0.66 negative on the Russell, all finishing at the bottom part of the daily range. Even Bitcoin was down 0.58. So that's a weak day in the U.S. equity markets. Over on the right, you could see the new highs minus the new lows on the NYSE and the NASDAQ. I look at 12 months and you could see they're still positive but coming down. If we look at the S&P 500 sectors on one-day performance, what was up? Real estate, utilities, energy, and staples. What is a name that we would use for those four groups? That's right, defensive. Defensive is what led on the day. Industrials, communication, discretionary lagged, and those are some of the growth industries that have been leading. In fact, if you look out over the last 50 days, technology up 12.6, industrials 7.45, and materials up 5.42, communications up 4.98. So what lagged today were some of the big leaders in this big rally that we've had. Over here on categories, MLPs were a leading group, gold, oil exploration, and then semiconductors was up 0.5%. Silver, preferred, cybersecurity on a potential takeover of CyberArk, and then Internet of Things and software. That's it. The rest of the things were down. And we could see over here, 41% of the S&P 1500 were up, 26% of the NASDAQ. Boy, that got even weaker today. And 43% of the NYSE was up. So NASDAQ led to the weakness on the overall NASDAQ composite. If we go and we look at the timing model, no change. I thought we might, but until we close below the daily 30-period WMA, we're still in a buy on all four of the ETFs. You can't ignore the chart. And the chart tells me that the Russell's very close to flipping. That has been the laggard, and that the diamond is the next closest. They've flipped their bongos already. On the weekly, the more long term, um, no breakdown at all yet. Everything's still in a buy. Now, I need more than just divergences and some of the things we talked about yesterday of signs that the market might be topping RSI divergences, less and less new highs, AD lines turning down. All those things are true. But if we're going to have a big sell-off, I expect to see some of my funny signals like kahunas and phoenixes, and we'll see if we got one of those today. If we look at the index ETFs, let's just blow them up real quick one at a time, you will notice something has changed. And what's changed is the seasonality line. We've now reached the period of time going into August where seasonality is no longer positive. Maybe it's flat to down in the beginning, but we're going into a rough week or two in the markets. Very typical, historical. We had a bearish engulfing pattern, which is a negative day. And in fact, if you look at that, it was such a broad bar, it took out pretty close to the prior 2 days, not just the prior 1 day. That is a reversal looking system. Now, my guess is without further technical damage or other signs, do we just pull down to the 17 and bounce? That's only about 2% away or so. That might be the most likely, but I'll be watching very closely. So a little bit of damage here that we haven't seen. And notice, what did we do early on in the day today? We set an all-time high. All-time opening high, then an all-time high, and then we sold off. In fact, if we look at a 5-minute chart, that's a 6-minute, you could see that the markets peaked earlier in the day, in the 2 o'clock range, and then sold off hard and tried a little bit of bounce in the last few minutes. But that was a big sell-off there. I mean, obviously, it's not the biggest distance. It's just a lot of bars because it's a 5-minute chart. Not that I care and would ever do it, but you can even do now in the program 1-minute charts. But that's not the kind of thing that I'm going to probably will be doing. Let's go back to the daily charts and let's go take a look at the Qs. So we're going to see a similar pattern that the seasonality is no longer going up and not a bearish engulfing pattern. The other one was bearish engulfing. If I called it bullish, I apologize. At all-time highs with the doji before. Again, this could be just a modest pullback to the 17 unless I see more signals that say, boy, there's danger. And with the Fed meeting, obviously anything can happen. Diamonds, seasonality is rolling over. The diamonds have been going sideways now for a little while, and this would be a John Person low close doji. The doji bar followed by within the X bars closing below the bottom of the doji. This one's going to hit the 17 probably early on tomorrow if the market opens up lower. And will it hold, or is the next line of defense going to be somewhere around here where we expect the 50 to move into? We haven't been talking about pullbacks at all for quite some time, but I think we do see some danger here. If we take a look at the Russell, like the diamonds going sideways, sitting on the 17 and about to experience a little bit flatter, negative to flatter seasonality. So we've had a huge run. We have seen little corrections along the way. And right now, who says this will be anything but a little correction? And you go positive a couple of days, you're going to see the 50 cross over the 200, and that might be a logical place for this to pull back to. So am I cautious up here? Yes. Do I think I should raise some cash unless we see a rebound tomorrow? Yeah, I think so. I sold the Chart Industries with their buyout. I trimmed a couple of other positions, and I may trim more tomorrow based upon what the market action is. VIX was up as we say, when the VIX is low, look out below. This was a 6% move off of a low number. We'll be tracking that. This is when the VIX tells you it's time to buy. So the VIX is signaling increased volatility, and I don't even have to blow up the dollar. Dollar was up 0.26 today and took out this line here, which had been resistance the last couple of moves. A strengthening dollar might be good for some companies, but it's probably not great for the U.S. equity market. Looking at commodities on this day, which went from risk on at the open to risk off, you could see gold, a little bit of a spinning top at the bottom of this pullback. So I guess it's not a spinning top, but gold was up 0.28. Silver was flat, two dojis in a row, 0.06 up. Oil made a nice move, up another 3%. So oil, let's just roll this up and see if we can figure out where oil is going to. I mean, is oil heading back up to challenge $83? It's only 6% away. And maybe that, if not even that much, 5% away. And maybe that's the target we should be looking at. But oil breaking out is not necessarily great for the US markets. Natural gas is still dead. And then the other thing I watch closely are the interest rates. And you can see the 10-year was down 1.9%. The 30-year was down 0.7, hold on, let me get the right day, down 1.79. They're both down 1.79. Is that true? That was 1.9. Um, and that's probably good for the markets. And we'll see how they respond, as well as how does the precious metals respond to the Powell speech tomorrow. The bucket showed a little bit of shift to the left, but nothing has more than 10% of the stocks in it at the bottom. So getting a little bit oversold short term, but not enough to generate a signal. Market breadth, you could see we're in the midst of this orderly pullback on the NYSE that, and let's just very quickly, let's just look at market surge and look at what the volume was. There you go. That's my username coming. And my password, dash, dash, dash. Now let's see what it says for market surge. NYSE volume up a little bit and NASDAQ volume down a little bit. So not a big volume day, but a little bit higher volume on the NYSE that you could see here. Notice stocks above the 50, stocks above the 20, definitely pulling back. On the NYSE, new high, new lows are positive, AD lines negative, and up down volume, and there's no signals down here, so no Hindenburgs. That's what I'm looking for to give me that signal that this is more than just a run-of-the-mill pullback. Back here on this top, especially on the NASDAQ, we were seeing some Hindenburgs before the rollover. We got them here, but they were a little bit late, although it still would have kept you out of some pain. So we haven't seen the Hindenburgs yet. So I usually expect to see them if we're going to have a big market pullback. The NASDAQ composite, similar to the Qs, a bearish engulfing pattern at an all-time high. Massive pullback in the stocks at new high above the 50, 20, and 200. And this has been falling as the stocks were making new highs. That's a negative divergence. Up down volume was high, or new high, new lows were positive, but the AD line really took a dive, as did the up down volume. No signals down here. And then just building upon that, here is the spider, the NASDAQ composite, the Russell 2000, and the S&P 1500. And you could see the 13-week new high, new lows. Clearly not at a signal anywhere, but it's dropped well off, overbought, and is more neutral. And you could see that the RSIs have turned down and everything, and they turned down before we hit the high. So I think that we're probably seeing divergence there. Certainly seeing it on the small caps. If so, how do I put this all together? I think we're due a pause here. Obviously with Meta, Amazon, Apple earnings imminent, it's hard to be that directional one way or the other because those things could really move the market. But it just looks like we're getting tired here at all-time highs, at least on some of the indices. I'm not calling for a massive pullback. I'm calling for a correction, 2, 3, 4, 5, 8%, and then a resumption of the uptrend. But who knows? If I see a Hindenburg omen tomorrow, then I'm going to have to open up my eyes and say, one, Hindi doesn't matter, but it's got me nervous. And if I see a confirmation within the next 4 or 5 weeks, that will tell me to be careful because there hasn't been a major market pullback that doesn't first have a Hindenburg omen for over 100 years. So I pay attention to that signal. Ratio charts will give you a sense of what was working on the day, and it takes a second to build. These are the various entities with a spider ratio chart. So you see Bitcoin has pulled back off the highs, wasn't bad today. Communications has come down, discretionary has come down, staples is very weak. Industrials has recently broken down, healthcare can't get out of its way. Financials are weak, energy has turned up, materials are down, real estate maybe up the last few hours. Tech's the long-term winner here, and utilities, probably because of the electrical utilities, and the data centers has held up okay. And I'm just looking at the white lines at the end. Now the JS layouts where I do most of my work, and I'm not going to go deep tonight because I don't want to give anybody the impression that I'm expecting to buy a lot of stock tomorrow. I'm not, especially with the Fed not coming on until the afternoon. So I'll be doing positions, moving around, deciding what to keep into that report. What do I want to take profits in? It's been a great move off the bottom, and I've been taking profits because I want to show a good performance at the end of the year, and you don't perform if you don't have profits. And since I have option trades, they're not long-term holdings, so I've taken a lot off. If we look at my top-down view, just to get a sense of what's working today, and this is on a broad number of stocks: real estate, energy, utilities, real estate, energy, utilities, staples, a very defensive looking group. If I look at what industry groups are working, real estate, pharma, recreational vehicles, REITs, general utilities, real estate, waste management, REITs. A lot of these things pay dividends. Um, but you can see how quickly we're going to go to red, and there's a lot more red than there are green industry groups. All right, so normally I would look at, and I'm just not going to look at the stocks, the top 3 sectors, and then I would take the top 10 industry groups, look at 2-day momentum, and look at the first couple. CBRE real estate, they own office buildings, I believe. Nice breakout. I'd pop up here, look at it's actually growing nicely. Revenue is growing, doesn't pay a dividend, but CBRE looks interesting. Jones Lang LaSalle, I think it's also a real estate builder breaking out. CIGI, don't know this one, but breaking out here. Welltower, I do know it pays a nice dividend, and I like it because it's mostly medically related and things that are stable from a business perspective. I would go down the list, but as I said, I don't want to give the impression that I think this is a good market to be buying. One thing that did look interesting to me, and we'll come back to it, is EQNR. This is a Norwegian oil play, and energy is coming up. It's certainly been a very beaten down sector for quite some time. Oh, let's put on a weeklies. Now, this one has been as high as in the 40s. It's now 27. Um, does it have in it to run up and retest that? And I'll talk in a few minutes why the stock came to my attention, but breaking out today on good value with a new EMS, a CPR, in the last 2 days, a volume, a breakout, and double momentum, relative strength at OBV. So I'm not going to do all this today because, again, I don't want before the Fed, I think I'd be doing you a disservice. So let's go back into the impulse list. And let's just show you my favorite scan and look at the 5 stocks there and call it a night. So big earnings tomorrow, Fed announcement. You got to be cautious, I think, in the morning. 2 days momentum up, 5-day volume, okay. AIP, Arteris Technology, don't know anything about the company. It's a cheap tech play. Big volume the last 2 days. You had a CPR, 2 days of volume, breakout, 2 days momentum, good relative strength in OBV. It's exactly the pattern I like. I have no idea what these guys do. I have no idea. I'm going to see if there's earnings came out. We look in here. Earnings are not due to August. We see here if there's any news. Near memory computing chip, a leading provider of IP for accelerating semiconductor creation. Okay, well, that doesn't sound bad. Semiconductors are hot, and I see a breakout here. So I think AIP looked interesting. Equinor, the reason why I found it was because the double momentum scan. Kinetic, and I always think about them as Ninja Trader and data. I just don't know if that's who this is. Earnings are out in August. News, fully electronic equities exchange headquartered in Dallas. Oh, so it's the NYSE, Texas. All right, so they just opened up a stock exchange. Don't know much about that business. Pays a 5% dividend. Well, I mean, don't really like the earnings per share growth. In fact, they're coming down. The revenue's doing okay. Earnings are August 6th. Again, this is purely based upon those two dots. Rubric. This one looks like it's getting ready to run. Doesn't make money. Revenue's increasing. A small company, although it's got 11 billion market cap. And you could try a different number of these you could connect. Let's go through that high. It's breaking out. I would wait till it closed, traded above the high of the signal. But here's a stock that's been a hot stock that is pulled back, sitting on top of the 50, free parking, two double momentum, volume and breakout, relative strength and OBV look good. I think this one looks interesting. Do your research. Don't buy it because they said I buy it. Now remember how I buy things. This is not investment advice. My style is I don't buy it till it takes out the prior high, this high here. So if the market opens down tomorrow and it trades lower, I don't want to be in it. I'm also going to figure out what my stop is. And I think to me, it's a natural place to put a stop in that level. So let's pull my line out. And let's see if I'm buying it here at 94. That's way too far away for a stop, so I might bring it up to the low of this today's bar. It's still a long ways away between where I'm buying it, but I would probably look to put a stop underneath, and I would never enter a trade without knowing both. Where does it have to go for me to buy it? What is my target if I get into the stock? In this market, I'll take 1R. All right. So whatever my risk is, I'm going to take half of it off when I have made up my risk and I'll move it to break even. Um, it is not a market to be a hero. And I like the setup. Trade above this line. I like it a lot. It's taken out these highs. Could easily fail here. But the minute I enter it, I put a stop on. In fact, I put the stop on before I enter it with my broker. And lastly, WGS, genomic testing. Don't really know this company. It's a space that has Caris, Tempus, Natera, been under pressure. Nice little uptrend. Wonder if they had earnings. Earnings July 29th, massive increase in earnings, and they've been growing their earnings. That's pretty impressive. Big surprises. Revenue is growing with surprises. That's not a bad looking fundamental picture. I might do some research. And again, why am I even looking at it? Two momentum dots. When you look back at when you've had two momentum dots, typically you get a nice run. This one, the second one, we're already in the move. Here, in the move. Um, how much more does this go? I don't know. I'll be watching WGS. Of the bunch, I think Equinor, because fundamentally I like the oil story here and I don't have enough energy in my portfolio, and AIP looks interesting. So I'm not buying anything at the open tomorrow. I'll be very clear unless something happens overnight that changes my mind. I'm going to be sitting and watching the Fed. I'm going to be balancing my positions and taking some risk off going into the Fed meeting, always ready to come back in. And then we'll be waiting for some big earnings after hours. Have a great day. Sorry for the short report. I just don't feel like giving a lot of stocks when I don't think I want to be buying them that much at the open tomorrow. Take care, everybody.